daily outlook for Friday, July 10th. We can see that yesterday's profile was a classic buy. Okay, we're anticipating this because of the weekly profile here. Price, again, overall is trading inside of a consolidation, and we saw Wednesday reject at the discount array here of the consolidation. Right, so price traded from discount back inside equilibrium and closed right at those levels. In fact, it closed at 50% of the suspension block, located at 50% of the previous monthly range. Okay, so because of the weekly profile, I do believe that the drawn liquidity should, or at least the low-hanging fruit, should still be Monday's high, right? To see a new high of week being created. But overall, I do want to pay attention to price potentially creating either a consolidation daily profile or overall for the New York session to be high resistance. And the reasons for that are, one, because we're trading at 50% of the consolidation. Two, there's a potential bullish fair value gap being created here. Okay, oftentimes the third candle, that is to create a fair value gap, can deliver as a consolidation, right? And this would then offer us a potential setup for next week to create a low of week inside of this fair value gap. And look, if price will end up rejecting the range today, okay, so creating some kind of open high low close profile, to me it would have to do so trading above the previous highs and failing, or creating a divergence with Monday's high. Okay, and the way that's looking so far, that would look something like the S&P 500 trading above Monday's high and Nasdaq, say, failing at 50% of the rejection block from Monday. Three-week look-back chart, we can see that this was an important level, as mentioned yesterday. Price has reclaimed the fair value gap located at 25% of the previous weekly range. Okay, this was a sign that today was going to trade higher, and this is how you were able to identify here that 10 a.m. was a shakeout inside of the range. In fact, if you look where the 10 a.m. low formed, you can see that it forms right at 50% of the 4-hour reclaimed fair value gap. Okay, so we're now back to trading inside the range of the bearish shorter block. So, you know, because we're back trading at 50% of the previous weekly range, and because we have a potential bullish fair value gap being created here, you know, what I want to pay attention to is, if New York were to open in premium here, ideally would want it to have a spike lower inside of the range, okay? Because if it doesn't, then I do suspect that it could create a profile like this, right? Some kind of, say, Z profile here, since we're trading at 50% of the range. We're trading right here inside of the daily chart. We're at the last day of the week, potential bullish fair value gap being created. Okay, so I do believe that today will either end up, you know, being something like this, or this, or this, right? Some kind of rejection at the highs, divergence with the high of Monday, and from there comes back inside of the range and closes the week. Okay, we can look at a 3-day look back chart. Let's first look at where we come from inside of the range. The 3-day look back was a classic sell. That's so expansion, consolidation, expansion, consolidation. Eventually Wednesday, I had ended up labeling this as a classic buy. I mean, it's not a textbook classic buy, but I didn't really know how to label this. But the idea of it is that, you know, at the open, price came from expansion to consolidation, right? And the open continued to consolidate, followed by a London expansion lower. But now you see, for example, the difference between this price action and say this price action, right? Where here price expands but then doesn't reverse, right? It simply reaccumulates from these levels, whereas of Thursday here, price expanded, but then it failed to hold the fair value gap in the range, right? Say over here, price came from expansion to consolidation, respects the fair value gap. Right, now here price expands, price revisits the fair value gap, respects it. Here price expands, doesn't respect the fair value gap. Right, so this was an expansion to expansion V-shaped reversal, and you can see that the closure of this power of 3 was very bullish, okay, because it left behind the range of a fair value gap that it ended up leaving as a breakaway, and the range of a bullish order block, and the range of a breaker, right? So a lot of PDRAs concentrated at these levels, and in fact the low of day from yesterday, right, formed around these levels. Okay, so expansion, to, you know, what do you want to label this? Reversal. This maybe looks more like a reversal profile. You know, just because of the way that it closed and because of when the reversal is done here. Expansion, consolidation, expansion, consolidation, expansion, expansion, retracement, expansion. Right, and then yesterday creating a classic buy, continuing the trend, right, of the second half of the day here from Thursday. Okay, so this was a sign here to anticipate that a reversal was coming, and yesterday has done that, right? So now we can, since yesterday was a classic buy, we can identify what it left behind in the range. We know that these profiles here always tend to leave clean PD arrays in the range. The first one that's very obvious to me is this one, right? We have the range of a bullish fair value gap located at 50% of the range. You can see that the rejection block here from 10 a.m. forms from these levels. Okay, so I'm going to want to identify this range of order block, and at 25%, you know, you got a 1 hour order block. Maybe we can refine this to a 15-minute chart, see what's inside of the range. Got here bounced price range, a fair value gap. I can't find anything obvious. Maybe a 30-minute chart. Okay, this makes more sense here. As you can see on the 30-minute chart, we actually have the range of a suspension block, right? We have a volume imbalance in premium, a volume imbalance in discount, and in between that, a fair value gap. Okay, so we got our level located at 25% of the previous day's range. We have our level located at 50% of the previous daily range. And in discount, we're looking at the range of a bullish order block, but I am personally not anticipating for price to need to come back all the way down here today, so I won't be putting up these levels on my chart. Okay, so I do think that the low of day should be forming around, if not this one, right? If price were to cut through that 30-minute inefficiency here, that suspension block, then I would want to see it respect the upper half of the bullish order block from the previous daily range at 50% and quickly reclaim the inefficiency. Okay, this is in the scenario where, say, we'd be looking at a New York reversal in terms of a daily profile. But if not, if price is going to be a classic buy, then I do anticipate that the fair value gap located at 25% of the previous daily range should be enough to send price higher, right? Especially that it cuts through a large bullish order block here, right? I wouldn't want to see this level being displaced through. And again, as mentioned, in terms of a drawn liquidity, we're looking at a low-hanging fruit being a new high of week. If price were to invalidate, if price were to trade above this level already coming inside of New York, and you still believe that the drawn liquidity is bullish, then you'd be looking at the daily high from Thursday. Right, so this daily high here, and as we saw, this daily high had come at the lower quadrant of a bearish order block, okay? And in fact, the current weekly high located at the low of this range, okay? So essentially your drawn liquidity, aside from the low-hanging fruit, would be the quadrants of the daily bearish order block. Now, in terms of say for whatever reason price will not be delivering as an open low high close, then again I would need to see price fail at the previous daily high, maybe consolidate, trade above it, fail, and or a divergence at the current weekly high, right? So with the high of Monday, the S&P 500 being closer to this range high, I would want to see the S&P 500 take that level while Nasdaq fails to do so, right? Simply rejecting inside of the wick, and from there trade lower, right? Now, if it's going to trade lower and New York offers you that opportunity, I'm going to want to target one of these two PD rays, because again, I don't think that we have the narrative to assume that a reversal is on, obviously. I don't even believe that we have the narrative to look for some kind of open high low close profile here, but I'm mentioning it in case it happens, right? Because everything's possible. Okay, so little recap. On the weekly profile, we're looking at a Wednesday low of week. We saw that price came from a discount bullish order block back inside equilibrium of the range, where yesterday closed at 50% of the daily suspension block. So because of the weekly profile and because of the level that we come from, right, discount order block, I anticipate for the low-hanging fruit drawn liquidity to be a new weekly high. Again, if price were to trade above this level already coming inside of New York and the daily profile is still bullish, then I would like to target 75-50% here of the premium daily order block. If price will not be trading to these levels, that then will offer some kind of it could be a consolidation, could be a not a sell profile, but an open high low close profile. Then again, to me, that would need to look like a sweep above the previous daily high to close back inside the range, right? And that would create a daily bullish fair value gap, and or a divergence at the high of Monday. On the 4-hour chart, we saw that yesterday has reclaimed a fair value gap of importance, and we saw that we're currently trading and the new daily power of 3 has opened inside of the order block at 50% of the range. Okay, so yes, our drawn liquidity is higher, but what I'm saying is just be careful if New York were to open already above the low-hanging fruit drawn liquidity being Monday's high. If New York does open above this range, I ideally would like to see New York, right, or at least 930, the opening range, have first a shakeout lower, right, to then trade higher, because if not, I do believe that this can lead to some kind of profile, say like a swing to Z here if the open first trades lower. If not, right, some kind of reversal profile that sends back inside the range and closes, say, you know, at somewhere around 25 or 50% of the previous daily range. And here on the 3-day look back, we looked at the face of price delivery. We saw that price comes from expansion to reversal to expansion, right? So expansion, expansion, expansion. Obviously, expansion 3 times, I mean, classic buy, reversal profile, and then continuation. And we analyzed the previous daily range being a classic buy day. We saw that at 50% of the previous daily range we have a bullish order block, and we saw that at 25% of the previous daily range we have a suspension block here located on the 30-minute chart. Okay, so ideally for me the best case scenario for the daily profile is for price to first trade lower inside this inefficiency to then trade higher. And again, the only worry I have about today, right, is the reaction around 50 to 75% of the 4-hour bearish order block located at 50% of the previous weekly range. Because again, I do suspect that this can lead to high resistance price action. Okay, but if not, aside from that, right, if the profile of day, if the session profile of New York proves to be bullish, then in terms of draw liquidity, as we saw, we're looking at the range of the daily premium order block. And these levels here can also be used in case of a rejection in premium, right? And in that case, if New York offers the opportunity to be short, you want to be targeting one of these levels. Again, we're not looking for a full-on reversal because of the time of week being Friday, aligned with the weekly profile being Wednesday low of week, right? So typically Friday on these types of profiles can keep on expanding towards, right, with the trend, or can offer some kind of consolidation, right, reaccumulation around the range that it's trading. Okay, so I think that this covers it for an outlook inside Friday, and so good luck and good trading to you.